Welcome guys to Crypto Aussie. If you enjoy this content, feel free to subscribe, comment, also like the video as it helps us provide these types of videos for you. Today, the most popular cryptocurrency on CoinMarketCap is Safemoon. 2022 114 in addition. Its quick growth is a major shocker. Safemoon's market value has increased by 8,880% in 1 month after its inception at the beginning of March 2021, when it was valued at less than $1 billion. Fear of missing out has spurred many to seek out Safemoon, and a small but dedicated group of believers has taken their passion for Safemoon off the internet and into the real world. Much like the Dogecoin craze that swept China's internet in 2011, many individuals now think it to be a 10000X coin. Why did Safemoon become so popular? Since it was founded less than 2 months ago, it has only had a handful of regular users and no endorsement from influencers, let alone its technology. A glance at Safemoon's foundations is in order. Safemoon's guiding principles. Pre-selected block creators are used to ensure that the Safemoon project remains centralized. Using and managing Safemoon is based on 3 fundamental principles. It's worth noting that trading commissions go back to the original holders. Because each token has an equal number of shares, the 5% processing charge is evenly split among all holders. In each transaction, a portion of the handling charge is used for the fund pool and other platforms, while 5% of the handling fee is immediately swapped for LP in order to offer liquidity for the LPs. However, half of the 5% fee is immediately converted to BNB in order to promote the Safemoon BNB trading pair. Safemoon takes great pride in its auto LP feature. Holders benefit from a twofold system when using it. To begin, the contract creates a firm price floor by adding the tokens of both vendors and purchasers to the LP. Anti-arbitrage mechanisms ensure that there will be a constant flow of transactions for holders. Stability can be achieved with the addition of LP, which in principle raises the token's overall LP and supports the token's price floor. Unlike other reflection tokens, this burn function does not aid supply decrease in the short term. By including Safemoon token LP, the price stability of the Safemoon network is reflected, giving investors a firm price floor and cushion. If large token holders decide to sell their tokens later in the game, the automated LP mechanism will limit the price fluctuation that would otherwise occur without this feature. All of this is aimed at alleviating some of the issues we're seeing with the existing DEFI reflex tokens. For these reasons, it is expected that this paradigm and protocol will prevail over older reflection tokens. Every time a transaction is made, a little percentage of the fee is sent to the Safemoon burn address, where it is burned. The appropriate crew will carry out the burn based on the situation. Burning important at times, but other times it doesn't. It was good enough to burn continuously on any protocol in the early days because burn could not be restricted or managed at all. It's up to the team to govern the token burn, which is pushed depending on milestones, to keep the community engaged and informed. It is possible to promote and track the quantity of manual burning that is taking place. With the help of Safemoon, we hope to adopt a burn strategy that benefits all parties involved in the long run. On top of all this, the website will show the total quantity of Safemoon burned at any one time, making it easier to track down the current circulating supply. Safemoon's market capitalization was $856,476,898 on September 23, 2021, whereas Bitcoin's was $823,203,662,065 at the time. According to the Safemoon website, there is now a total supply of 1,000,000,000,000,000,000 and a circulating supply of 575,000,000,000,000,000,000,000,000. The monthly safety protocol of Safemoon. LPs are brought into farming reward generators by transitory losses, which is a widespread misperception about static rewards, LP acquisition, manual burns, and high APY averages. Too many new cryptocurrency prospectors are being drawn into a high APY LP farming trap by the explosion of DEFI, leaving them feeling helpless as the earlier purchases with larger staking rewards force them out. There are times when seeing those 6-figure sums makes us want to jump right in. But virtually always the token suffers from an eventual bubble, followed by a bubble explosion and an impending price drop. The widespread adoption of static rewards, often known as reflection, a distinct idea aimed at eliminating the hassles associated with agricultural awards, is one reason for this. Because it's a one-time award, one solution to a long list of issues is to use static incentives. To begin with, the award amount is determined by the volume of token trading. After the insanely high APY in agriculture, early adopters began selling off their tokens, putting downward pressure on the price. Reflection encourages holders to hold onto their tokens in order to receive bigger refunds, which are based on the percentage of execution and are dependent on the amount tokens owned by the owner. Manual burns are useful on occasion, but they aren't always necessary. Burns cannot be reduced or managed in the early stages since continual burns on any protocol are good. In order to keep the prizes and knowledge of the community intact, the team promotes burns based on their achievements. Tracking the circumstances and amount of manual burning is possible. A long-term benefit of Safemoon's burn technique is that it is designed with participants in mind. Another way to see how much SAFEMOON is currently in circulation is to look at the number of SAFEMOON that have been burned, which we do on our website. Because of Safemoon's singularity, the emergence of high-yield liquidity mining raises the bar for latecomers to enter the growing decentralized financial industry, according to the Safemoon white paper. In order to alleviate the burden on the tokens that may result from their sale, Safemoon has implemented a concept known as static rewards. This reflect mechanism has increased the motivation for Safemoon holders to keep tokens for longer periods of time, as stated in a white paper published by the company. Additional stability has been added to the protocol thanks to Safemoon's autonomous liquidity pool. Token holders will also benefit from Safemoon's manual burn method in the long run, according to its white paper. Safemoon's network security system. The protocol's security strategy is described in the introduction to the Safemoon white paper as follows. In order to make the issuance fair, the developer burnt all of the tokens in his wallet before proceeding. Each transaction generates and locks a new liquidity provider in DX Locker, which will be available for 4 years. It took only 50 days for Safemoon to amass a market cap of $5 billion. This project's smart contract is actually a complete fork of another project named Pig, as can be seen by simply performing a simple technical study on it. Here is a quick analysis I'll perform with the pip code. Fork contracts make up at least half the number of new projects added by BSC every day. On the BSC blockchain, over half of the coins with a value of more than $10 million are pip forks. The Pig and Safemoon contract can therefore be referred to as the Pig contract as a whole. The following are some of the reasons why these agreements are ideal. Mining is done through joint ventures. All token holders will receive a portion of Safemoon's 10% transaction fee, which is automatically dispersed. Holding equals mining refers to the automatic delivery of a 5% transaction charge. Safemoon will burn 0.050. 4 equals 2% of the transaction fee, with the remaining 3% going to token holders as holding dividends, because 40% of the tokens have already been burned. Please be aware that dividends will be paid out on each and every transaction. That's just what I needed. This concept encourages investors to save their money and never sell. A 1-year dividend is thought to be worth 50–60% on average. However, this isn't the most important factor in Safemoon's success. Another characteristic of Safemoon is its self-growth of liquidity, which is critical if it is to take over coins like BSC, ETH, and HECO. Liquidity is self-sustaining. For each transaction, Safemoon charges a 10% fee, with the remaining 5% going directly into the liquidity pool, which means that liquidity is regained. One example is when there are more than 5 billion tokens at the address, Safemoon will improve liquidity by selling 25 trillion tokens, or half of the total. The remaining half will be added at a 1-to-1 ratio, using BNB and all remaining tokens. In the early phases of a startup, a lack of funds is a common challenge. If investors aren't actively raising the pool's liquidity, the token's price growth is the only thing keeping the pool's depth up, and that's just a blip on the bull's back. Due to this, a lack of pool depth can severely impede the progress of many enterprises that fail to increase their own liquidity. Safemoon also has an advantage over the competition in that it can recycle liquid assets. The flames of deflation. Approximately 40% of Safemoon's tokens were destroyed. Because of a 5% bonus function, Safemoon tokens are directly burned, resulting in the deflation and ongoing burning of Safemoon tokens. Safemoon's success can be attributed to the following three ingenious designs. Protecting the moon, a smart strategy. Safemoon has mapped out its year thus far. A marketing campaign and a staff increase were announced in the first quarter of this year. Safemoon plans to produce an app, a wallet, and some games in the next phase of its development. Along with looking into permitting trading on exchanges like Binance, it also announced intentions to begin developing its own exchange, increase its staff by 35%, and add offices in the UK and Ireland in the near future. The Safemoon exchange will be completed and a branch Safemoon office will open in Africa later this year, according to the company. Safemoon offers a unique token model that is geared towards helping purchasers earn incentives and penalizing dealers. Until now, the project hasn't added any real value to the economy. As a result, the current price is mostly determined by the attention of cryptocurrency groups and projects. In addition, Safemoon's development team is anonymous and can only be validated by the smart contracts regulations. However, the Safemoon protocol code has not been examined and confirmed by any third parties. When using Safemoon, you should take extra precautions. The secret developer team has carried out millions of scams in the past BSC. However, an anonymous team is not necessarily a bad omen for a cryptocurrency project on its own. SushiSwap, a well-known DeFi project, frequently utilizes this feature. A growing number of anonymous teams are working on decentralized financial initiatives, which shows a trend. In respectable initiatives, the code is always verified by external teams with a strong reputation in the Bitcoin area. Nonetheless, this is to keep the project's good name and reputation in the community by preventing fraud. The project should adopt trust-building methods as soon as feasible if it intends to spark similar enthusiasm as its model Dogecoin. Yes, I think it's a good investment. There has been a 32.53% increase in Safemoon's value since its introduction. There is no doubt that this token is meant to express gratitude. Investing in digital currency is encouraged by all token economic designs in Safemoon since investors can earn passive income from transactions. As a result of the influx of new investors, Safemoon has seen its stock price soar. Safemoon has a large and supportive community, making it a wise investment. However, you must first take into account all of the possible dangers. Safemoon, for example, has a significant level of volatility, just as other cryptocurrencies. Insufficient cash is another issue that could arise. It is possible that Safemoon's technique will not be able to completely avoid this. All Safemoon token holders will be charged a 10% handling fee, which will be split among current holders. In the next paragraphs, the dangers associated with purchasing Safemoon are discussed. Safemoon is a terrific investment opportunity, but you must understand that cryptocurrency investing is a high-risk endeavor. For instance, the significant volatility of cryptocurrencies puts them at risk of causing currency prices to increase and fall without warning. A wide variety of factors can contribute to this, including cryptographic whales that may engage in price manipulation. It's not enough to focus solely on Safemoon, as most currencies are still following in the footsteps of Bitcoin, but rather BTC and cryptocurrency markets. Consider using leverage trading if you plan to purchase Safemoon coin next. The more leverage you employ, the greater the risk, although this is usually rewarding for experienced traders. As long as you're able to accurately predict the direction of prices, you can profit from leverage trading by using contracts for difference. To put it another way, predicting the Safemoon price is the most critical step. You can make a lot of money if your Safemoon price estimate is correct, but the more leverage you employ, the less the margin for error becomes. Your Safemoon price forecast must be really accurate, and you should generally avoid trading with leverage until you have enough experience to think of yourself as an encryption specialist. You don't need to be a professional trader to acquire Safemoon cryptocurrency in a traditional manner. But even so, inexperienced traders face significant danger. In other words, you can invest in Safemoon, but you shouldn't put all of your eggs in one basket. The average cost in dollars allows you to maximize your return even during times of severe volatility. This token's potential has yet to be fully realized. It is now ranked 108th among all cryptocurrencies in terms of market value.